G'day everybody, Julian here from Ripe House, and welcome back to another market update where we give you a bit of an update in terms of where the market's actually heading, maybe review a purchase or two, and we also might answer a question submitted by the followers. So stick around and we're going to really unpack that now. So unpacking capital growth. So if you're new to the channel, what we do here is we have a bit of a change in terms of how the momentum is for the last month. We're then looking at how that market is tracking for the last 12 months. And then we also talk about the last session. So how has that market actually moved since the last session? Because, a market might have moved ahead in the last rolling month, but potentially it's starting to cool down. So if we take a bit of a look, really strong capital growth across the board, really. I mean, other than the Melbourne market, which I think there's markets within markets in that Melbourne market, that's at 5.6%. Most of the other states are around high sixes all the way into the mid-teens. We have a national average of over 11%. So that is, by all stretch of the imagination, that is a fantastic year in terms of capital growth. You're typically seeing kind of 6 to 7% capital growth numbers when it talks of housing. So we're talking about 11.3% capital growth number. That is probably something in terms of in the media, in the news, and you're probably not hearing enough about in terms of how fast the property market's actually moving, because 11.3% is a phenomenal 12-month period. I guess we're seeing Sydney close to 10%. That Brisbane market's having a bit of a second wind. We have a look at the change since the last update. It's actually moved 4.4%. So what that tells me is potentially there was a quartile there which they might have had a bit of a slowdown or a quieter period, but then the coming quarter actually really steamrolled ahead. Perth, it's at 8% over the last 12 months, but, that's not bad really. If you can get 8% each year, you're doing really well there, and that's going through a bit of a second wind as well. Same as Adelaide. There's nothing really to tell in terms of from a negative standpoint. Perth dropped off since the last session, but again, there's some quartile numbers that change in there, but just across the board, really, really strong numbers. Sydney's probably moving a bit harder than that Melbourne market, but again, that's in pockets. I know for a lot of the Melbourne market, sub that $900,000 price point, they are sitting well and above that 5% number, which is being spruiked there. But then if we go to the next side, because there's capital growth, but there's also rental movement. And rental movement is a great indicator in terms of rental pressure happening in the market. Now, sometimes you can get some markets not moving as aggressively, potentially maybe say that Melbourne market, there's a lot of apartments or little sub pockets which maybe aren't moving as hard, but then you've got the homes which move different. But if we just take a look at a national average, so nationally, we're seeing a massive rental yield squeeze. So the previous slide, we talked about over 11% capital growth movement. Nationally, rents have moved at 5.1%. That's a really strong, healthy number, but it's less than half of what we're seeing in terms of capital growth. So rents are going up, but they're not going up at the same percentage that the capital growth movement's happening. So you're essentially seeing yield or rental yield squeezed. If we look across the board, probably the one big outlier there is Hobart. So Hobart over the last 12 months has moved 11.4%. And for those of you who are long-term followers of the channel, we had been previously purchasing in isolated pockets of Tasmania. And we did kind of say it's a 6 to 12 month watch and wait on other pockets of Tasmania. All of the indicators for us are saying that's a really strong market that we're continuing to keep an eye on. And as we go into the next slide in there in terms of a bit of a summary, the Sydney's gaining strength, Brisbane, Adelaide maybe flexing again in terms of a second wind, but that Hobart rental growth market's telling a bit of a story. And that's really reflective in terms of where we're purchasing as a business. So for those who have been following on, maybe a year ago or so, you saw us around about that 60%, 70% number in that Victorian region. And then we'll probably had a bit more of a weighting. I'd say probably 20 to 25% in Queensland and some small purchases elsewhere. Now we're down to 62% in Victoria, and it's hardly a market when you've got nearly 2/3 of share happening in Victoria. It's not like we're exiting that market, but it's not at that 70, near 80% number that we'd seen. Now, what is bridging that gap? If we look at Tasmania, so 14% of transactions in the previous month have happened in that Tasmanian market. Now, you might be sitting there and going, well, 14% isn't a really high number. You need to understand in terms of sample size, like Tasmania as a whole doesn't have a large population base. And then as well as that, feeding off of that, there isn't anywhere near as many housing or listing opportunities come through. So that's at 14% as a percentage of listings or properties available. That is well and truly punching above its weight. So Tasmania is performing in terms of properties that we've purchased at the same level of volume of what we're doing in that Queensland market. We can even see there's a bit of an uplift here in that regional New South Wales market, and there's still the odd purchase in WA. But the Victoria is still doing a bit of that lion's share of where we're buying. And if we take a look a bit of the summary in terms of median prices, so the median price point for the previous month has been around that $610,000 number. That is something that has been consistently creeping up over the years. If we went back, I'd probably say about 18 months ago or more, that would have been high fours, maybe early fives. So you can see that shifting now. Those lower price properties, it's really hard for us as a business these days to be securing properties below that $450,000 number. The median yield is 4.7%, and that is trending down. I could definitely see that being closer to 4.5 come mid to early next year. The build date, we're always around that kind of 70s, 80s build. The land size is slightly up, so there might have been a couple of transactions. We're normally hovering somewhere between around that kind of 660 to 680 mark, so there might have been a couple of transactions there, which has boosted that. But, there's no cookie cutter blocks in terms of those house and land package builds where you're getting these 300-400 square metre homes. These are great purchases that have high land to asset value ratios. And to give you a couple of examples of that, we've had one here in regional Victoria. So $390,000 purchase price, 3-bed, 1-bath, 656 square metres of land, purchased for $390, renting for $440 a week. So a really solid yield there, nearly 5.85%. And, your land to asset value ratio there is huge. $390,000 for a 650 plus square metre block with a really strong yield. If we take a look at a purchase in Tasmania, 3-in-1, 570 square metres. Looks like it's been renovated over the journey as well. That was purchased at $610,000, renting at $600 a week, so 5.1%. And then maybe we move into a metropolitan Melbourne market, 4-in-2, 750 square metre block. That would be basically 2 blocks of land in some of these newer pockets where you have to buy. But that purchase at $900,000, renting at $600 a week, so 3.5%. So again, shows you there's a lot of value out there. High land to asset value ratio properties is really what we're looking for that are focused on capital growth. So that's a bit of an update in terms of where we're at right now. Always great to give you a bit of an insight in terms of where we're buying, where the market's trending. And if you haven't already, make sure you smash that like button, hit subscribe, and we'll catch you on the next one. Bye for now.